you've ever seen, bar none, the price of volatility. Is that not spectacular? I mean, look at it. I mean, it's not even open for discussion about time periods or anything else. It's just, how much can I buy in this area? And when this breaks out here, how much can I sell in this area here? How much? Give me a figure. 1 million, 10 million, 1 billion, 20 billion. How much have you got to buy, guys? How much have you got to buy? You know, we're in front of the we're in front of the price, literally, by about an hour on both occasions. So the market's bid from the cash open, the bottom edge was put in at 16:30. So that was 2 hours. 2 hours of buying at that stage. 2 hours of macro commercial buying. And into the top edge here, well, it went sell side from this point onwards here, which was about 3:30. Top edge was put in at 6 o'clock. So 2.5 hours of top edge selling. So 2 hours of bottom edge buying in here, 2 hours and 2.5 hours of top edge selling in here. If you took this trade on the NASDAQ, and you can see how clear it is, right? You can see crystal clear how clear that trade is. If you took that trade in the NASDAQ, it was worth $11,000 per contract over 2 days. It was over 11,000. It was nearer 12,000 over 2 days. So when you look at today's open, should we not be looking at this from the short term and saying, get me some short business up here? What do you think? Get me some short business up here. What are you thinking, guys? Absolutely do dandy, right? Absolutely do dandy. Did you see it? There's a sell trade right there. Look. Context. Getting that short trade in at that stage there is spectacular. It's got 19s down to 11s, 8 points, $400. And we've only just started on the day, guys. $400, and we have only just started. So when we took our profits, I came in and mentioned it. So we've just been bagging our profits in there. And obviously, we've just taken out the day session low here. I am, on a macro chart basis, only a seller. So I'm far preferring to get short into upticks. Far prefer getting the short into upticks. Volatility is very expensive. And if you don't believe me, take a look at the chart again. Volatility here against here, suggesting that if volatility pricing is right, this represents a premium of about $1,500 per contract in terms of pricing of vols on a macro chart basis. So again, we have that concept of context, haven't we? If you didn't look at the context to this, you wouldn't know about that information. As we zoom in, you can see that the context, you can see that the gammas came straight back in on the buy side, which is why we exited our trade here. I've still got the macro value, but I still need to put the short-term context back in, unless my intention is to sell over the course of the next 25 price highs, for example. You don't have the ability to do that as retail traders, and therefore you've got to just pick and choose the battles, which means that the short term lines up with the long term, preferably. And that means I'm a seller of upticks only when R squared on a 1 minute chart or a 5 minute chart or over the last 10 candles or the last 2 candles starts to give me a sell opportunity. I've already made my money for the day, going 19.5 down to 11s. I've already made my $400. I don't really care if I don't get any more trades today. I've made my $400 and I'm happy with that. If nothing else lines up, that'll be it for S&P today. That'll be it for the market today. And I'm cool with that. It doesn't make any difference to me. I'll get bored rigid. Maybe have to do some trade somewhere else, but it is what it is. You know, you just pick and choose the good stuff, the good trades.